Learn how to trade as S&P could be heading towards 5,200. Seriously, guys, inflation in Singapore is going nuts, and in fact itself going to hit us very badly by the fourth quarter of 2025. And I'll explain to you more in detail shortly. All right, let's go into this strong content-based video. All right, guys, this is Kel once again. Disclaimer apply as usual. Let's go into it. Now, remember, guys, over the last 1 month, I've been telling you guys that US crude oil will be going up soon. I mentioned that the Wall Street calls for buy, but the action doesn't really speak for itself. And the thing is this, S&P may really trade down to below 5,000 if the Trump recession or Trump session is going to get started. And of course, I show you with evidence to you that the Atlanta Fed real GDP estimate is showing that there could be a technical recession coming in by probably the late part of 2025. And it's crazy enough to tell you that right now. I tell you that the S&P 500 could be really going down to the target, which I mentioned back then is 5,222 level. And I did say that because that was on the 5th of March, because there's a lot of reason for that. And now we are seeing something similar happening. You can see the S&P rebounded exactly at the 90% mark as I mentioned, but it failed to go back above the 95 point. And last 3 days in the market sold down. So this 55.29 is going to be a very critical support level. If the market really breaks below it, we should see 5,222 coming in. And that is where we might be calling for a buy at that point itself. All right. But the thing is this, the Americans now are getting pretty worried, okay, since 2009 because of the rising unemployment. So with that, that's the reason why last Friday we saw the Dow Jones slamming down 700 points as the inflation and the tariff fear worsened. So we saw Alphabet, Meta, Amazon all shifted 4 to 4.9%. And apparently, so the NASDAQ has lost 2.59% for an entire week. So what's the main reason? Because the core personal consumption expenditure price index has came out harder than expected. And because of that right now, we can see back in Singapore, this is actually a article about 2 years ago, whereby the average cost about 4.81 dollars. But apparently it's right, just 2023 itself, some YouTubers share on TikTok and says that for Ya Kun set A itself has gone from 480 to 630. And in fact, I know for set B is a different one, but then the price has went from 630 to 710. So all these prices are telling you that the market is going to go higher and higher. And if you don't do something to yourself by helping yourself to make some extra passive income, you might be in trouble. So remember, in the early part in March, I shared with you, right, the US inflation since elevated. And of course, the result is come true. So now the question is this. The US credit fears gauge has reached the highest level since August after the inflation data. As a matter of fact, now the US official warns an inevitable tariff boosting inflation. And that is whereby the moderate US consumer spending now is increasing the price specter of the stagflation. So you can see back last year itself in August, everybody thinks the worst is over, inflation is at the lowest level, all is good. But the thing is this, the Americans are not feeling it. And right now, 2025, they are feeling it right now. So that means that this is going to go higher and higher. So something just made me think, is it going to be a repeat of 1930, the Tariffs Act? So remember that there's a Smooth-Hawley Tariff Act back in 1930, whereby basically the tariffs went crazy. And of course, that is where the trade slowed down, business collapsed, millions unemployed. And back then, the Dow Jones was at a record high, about 380. And after that, within 2 years, the Dow Jones collapsed all the way below 100. Yes, indeed. This is how bad it went. And because other countries fought back. So when other countries fight back itself, right, like Donald Trump, he implemented the tariffs straight away now on Canada and Mexico. The same thing happened for them. They are basically coming back with the tariff, right? So everybody is hitting back Donald Trump. So the thing is this, when these guys hit each other, who suffer? We, the consumer. So nonetheless, right, the BRICS countries are not going to give in. Brazil, Russia, India, China, all right, they are not going to give in. And South Africa, everybody is retaliating. And of course, this is not going to be healthy for the US side. Look at the debt, it's 36 trillion right now. And this is still going to go higher. As you can see, people are getting worried because this is the United States balance of trade is actually a negative level. And of course, you can see that now US spent about $659 billion in just interest alone. My goodness. So remember, back then it's only 34 trillion. So at 36 trillion, this number is almost higher, right? So it's about 1 trillion right now. So that's the reason why the interest is way too high. Even Elon Musk is trying to save the $1 trillion through DOGE, but that is only safe for one period of time. You're going to save much. So look at it right now. The pain is coming in. The US government faced a 9.2 trillion debt refinancing in 2025 with a rising interest rate adding additional financial strain. So of course, we know Donald Trump supports the tariff and trade policy, but we cannot deny that that will actually push the US to recession. As a matter of fact, right now, the maturity schedule for the 9.2 trillion is going to weigh the front half of 2025. Now you understand why itself the US stock market is coming down, because they are all fearing for the worst. But does it mean that if this is over, the market will recover? Well, it is possible. Now, we do know that the Federal Reserve wanted to cut rates for this year, right? But due to the inflation numbers now, they're starting to lower down. And the thing is this, we can see that, okay, there's a bit of error here as well. Okay, so I skip this to this one. So apparently now, right, they are moving on that there could be only a rate cut only on the 18th of June meeting. So which means from now, March to June, there'll be no more catalysts from the Federal Reserve. And the market is pricing in 64.9% there'll be a rate cut. So which means that at this point right now, the stock market has already priced in a rate cut in June. So from now to then, if there can be any more negative news, the market is going to sell. And that is my point. So based on this right now, we look at the S&P chart. You can see my point. The S&P previously was at a high around somewhere around this area here, back then about 5,650. It went down to the 95% mark brilliantly, and then it rebounded. Amazing, right? But once it breaks below 95%, it went all the way down to 90% very fast, okay? So this thing happened back then again in 2024, where the market came on 95%, bounces that nicely, and then rebounded. So this 5% rule seemingly worked, right? So we look at back again for the S&P. 61.43 was a high. The market did really bounce at a 95%, and then that was only it stayed up for one day. It went down again, came beautifully exactly at the 90th percentile level and rebounded. So this 5% rule is really, really amazing. Yeah. Okay. So the thing is this right now, within 3 working days, the market came back down, slamming, taking away all the upside. So that's why I believe the 5529 support level is going to be very critical. If the market can hang around 90%, there will be a bounce up again. That's for sure. But my personal feel is that the market will smash right through, and they may really test this number, 5222. Okay. Now, if that happens, what should we do? Now, based on what we are seeing right now, if the market really comes down and do a very strong rebound like what we see over here, okay, then we can do for a buy instead. Yes, it's a buy. So if we short the market, which we'll be shorting all this while, if the market comes down to 5222, I think that will be a very, very good price to buy into the market. Yeah. So watch out this number. I want you to take note of this so that you can actually maximize and make some money out of it. Because at the end of the day itself, right, you must understand that the US equity market has the biggest weekly inflow since November. But the thing is this, it came in about 33 billion. Then after that, later on, Donald Trump started to announce 25% import tax on the foreign made vehicles. That basically caused the market to pull. So the thing is this, a lot of money has came in and they're stuck. So now the question is this, if that is the case, right, back here, remember that? This is where the funds came in, okay? This was where the funds came in before Donald Trump changes his mind and increase it and announce 25% import tax. So those funds are being stuck. So if the market start to do cut loss, okay, or start to panic, I believe that that's the reason why the S&P 500 will break the 5529 level. Yep, there's something to take note of. So with that itself, right, if you look back again on the chart, I can actually see something very interesting pattern here. This is what happened in 2021, and whereby the market was extending itself, but once it broke below the 95 percentile level, which is something like similar like this, the market came out at 90th, which is happening like this. And then after that, when it breaks down, it went right marginally close to the 85%, which I suspect that the history will actually repeat. And of course, if things really go worse, it may go down for months. So you can see back in there is February, whereby the market had to sell down. Sorry, in December, in fact, started to sell, which is actually identically somewhere around here. So if this is going to be a roadmap, that means that by September, then the market will bottom. And that is something that I said before. We will see the technical recession in September or late part, and then inflation will be high in the fourth quarter. And that is where the stock market has came down a fair bit. Then we have the rally. And then, of course, by the time that happened, you have a massive new rally again. Now, basically, I'm bullish in the market later, not now. because I think that Donald Trump is going to do a lot of things, and I know that he attracted a lot of funds for US because a high tariff now is going to be beneficial for long term. It's just going to be very painful. So in short itself, right? Remember Warren Buffett ever say this: never short the US stock market, and I believe Donald Trump is going to ride out the US. So I think that the market will really do this something like this, and then we see a recovery like this for this year. Let's see whether I'm right or wrong. I'll let you know with more updates. This is Kel signing off. Take care and have a wonderful day. Bye-bye.